All right, guys, I just want to upload a quick video talking about my view on the U.S. equities market. And right now I'm looking at SPY, or the S&P 500. I'm sure you guys are all familiar with that, but if you aren't familiar with it, it's the top 500 companies in America. I think Facebook, Google, Amazon, Netflix, all the way down the list. There might be a few names on there you wouldn't expect, but for the most part, they're mainly household names that you'd recognize right away. And anyway, if you guys have been following this market for any length of time, you probably are used to its straight melt up type of behavior, uh, especially the Nasdaq, but the S&P 500 as well. Now, if you've been following closely, you also know that the market has been not necessarily following its typical behavior of straight melt up patterns, and we see that recently, especially off the yearly open. You have your January 1st right here, and then you get the yearly open, and price sells off very, very, very dramatically, um, which is kind of interesting. It took a little bit longer than it did in Bitcoin to put in that top, but at the after the yearly open, you get that dramatic sell off, a little bit of a retrace, another push lower, and now we're seeing a little bit of new highs being created and a little bit of a rally, contrary to what happened in the beginning of the year. Now, so it's not really following its typical behavior of just straight uptrend. It's a little bit more of a dynamic market, and you know which isn't great for investors, but as a trader, gives you a lot of opportunity, a lot of volatility to trade, and although we've already seen a good deal of that, I don't think the majority of it's over. I have indicators on my chart right now. Just because they sort of illustrate what I'm already looking at in price action. And I think for some people, it might help them to see the same things that I'm seeing because the indicators are showing the same thing. And I think actually for SPY, the daily chart is actually the best chart to look at in this case. Um, you know, the weekly and the monthly are pretty straightforward as well, but you can see things a little bit more dynamically if you look at it with this chart in mind that we're looking at on the daily. And I have this low marked off here. You can see kind of what's happening here. And really, this is the low I care about rather than this low, because this is the low that ran up and breached the liquidity here. So I look at this as a very, very significant pivot on the market. But again, you could use this low as well. It actually worked a little bit better than this low. But the idea is, the market comes down, breaks structure. Um, you get your official close below, sells off, and then you get a retrace up into this level. If you put a 618 retracement from this, you probably get right into the golden pocket. Yep. And you get your 21 exponential moving average crossing below the 55 exponential. You have your bearish 618 retracement into the golden pocket, and you sell off running below these lows here. And then what happens when you get below these lows here? Well, if you go to the RSI, you have very significant divergence occurring in the RSI. So we have this low coming here, price sets a lower low, but the RSI is creating a higher low. That's typically, a pattern you see when price approaches a macro level. So in this case, I think it's fair to identify this as a macro level. But your RSI divergence isn't really confirmed until you close above you start creating higher highs. So price comes up, sells into that bearish retracement, comes down, sets in a lower low, sets in divergence on the RSI, and then you have your moment of truth. Price comes up, takes out that higher high, and then you get you don't have your confirmation until you get that higher high, and then you get that confirmation right there. You have your higher high, break of market structure. Now the market's doing something different than the downtrend it was doing, right? So at that point, we don't want to be holding our bias on the short side. Now, price breaks structure here and then runs up above these highs right here, runs the liquidity above there. So that tells you that something different is happening in the market if price does that. Again, that's characteristic behavior of a bull market to run the liquidity above old highs. And, so ultimately we see that liquidity being run, and then of course, you get your retracement right after that into this break of market structure down here, which I think is very important, right? Because this is where we created the higher high. Price comes up, creates that higher high. Now we have a break of market structure, and then we get the price coming down and testing that break, right? So this is your inflection point of the market, right? Comes down, retests that, and then now you actually have price appearing to put in what looks to be like a low, and this would be very significant, right? Because you have this consolidation range here, and it looks like today's price action did in fact close above that range. So you have a daily low confirmed, closing above there, basing off these highs. You'll get further confirmation on the weekly if you get a weekly close above last week's close. There's still, a little bit of time left on the weekly, so the jury's still out on that. But if we go back to the daily, if you get your confirmation, right, then you start looking at this as a swing low, right? Because this low is very significant, right? You have your divergence here at a macro level, but it's really a swing low because it's surrounded by two higher lows on each side. And whenever you get that signal, right, that's typically a sign that the market has bottomed out, and it might be a good idea to be trading with that in mind, essentially. And again, on the flip side, it also creates a very strong invalidation point, right? Where if the market violates those lows, uh, you know, the whole idea that the market is bottomed out is obviously that's no longer in play, and just essentially everything we've just been looking at for the last 5 minutes is not really valid. And anyway, I tend to trade a little bit with a bias on SPY for the idea that it's probably just going to go up because that's what the market does, because it's trades against the dollar and the dollar's losing value. But when as a trader, we need to see we need to actually have a legitimate setup to trade, right? We can't just trade fundamentals. And in this case, I believe you're seeing that in the market. So I've never traded equities, but price action is price action is price action. Price in all markets abides by the same rules. So essentially, you do have what appears to be a valid long setup in the process. Anyway, if you guys like this type of content, just make sure to like the video, subscribe to the channel, and catch you guys in the next video.